Hello everyone, this is your host Vaibhav. In today's session of Daily Stock, we are going to consider the quarterly earnings for the Gilead Science Inc., which is a pharmaceutical company which was in limelight in the COVID days because of its product of remdesivir, which was helpful in curing many patients which were infected by the COVID virus. But now we are in 2024 and those days are behind us, and so is the demand for the remdesivir, which is marketed under a different name, and this has contributed to the decline in the revenues for the Gilead. Of course, this is not a one product company, it offers other medicinal products as well. But still, if we compare the overall revenues for the company, it hasn't been growing, it hasn't been able to grow in overall revenues, though the different segments are performing differently. In segments like oncology, there is robust growth, but that is being compensated by the decline in some other segments. So overall, the company has been able to maintain the revenue base in the vicinity of around 7 billion US dollars per quarter. But what we need at this juncture is a strong catalyst for the growth, and that is, I think, some distance away. So, for the investors, the stock hasn't been the first choice. It has been receiving lukewarm response, and for last couple of months, last even you can say couple of years, it hasn't gone anywhere. It has been hovering in a narrow range, and I don't feel that that is likely to change in near future, not unless company discovers something new which gets well received by the market, and by market I mean doctors and patients who are ultimate beneficiary of the Gilead Science innovation and products. Now we see how things are shaping up for the Gilead. In the last quarter, it has listed that its revenue was higher by 7 percentage point if we exclude the Vaclary, which is the marketing name, the brand name of the remdesivir. So if we take it out, there has been growth, overall growth year on year of 7%. And as I said earlier, also the oncology is one of the best performing segment for the company with this robust growth of 37% for the full year. These are the highlights of the fourth quarter financial results. The EPS decreased to $1.14 in comparison to $1.3 in the same period of 2022, primarily due to the higher sales cost and lower veterinaries revenues. The EPS is slightly lower, and that is quite natural when we see that the revenues are lower in comparison to the same quarter, that is the fourth quarter of 2022. These are the key products for the company who bring in the chunk of revenue. The company has listed that the regular sales decreased 28% to $720 million in the fourth quarter of 2023 compared to the same period in 2022, primarily driven by the lower rates of COVID-19 related hospitalizations. The operating margin for the fourth quarter is at US dollar, not US in US dollar. In percentage term, it was at 70.4. The company is spending a lot of money on the R&D as well so that it can find the next catalyst for growth. Now we head to the consolidated statement of income. Instead of going through each product details, here we have it. You can see that for the quarter ended December 31st, 2023, the product sales were at $7.07 billion, and if we add 45 million from the royalty contracts and other revenues, the total revenues come at $7.1 billion, which is slightly lower in comparison to the 7.38 billion revenue for the same quarter of 2022. If we consider the cost of sales, the cost of goods sold has risen sharply from $1.4 billion to now upward of $2 billion. The R&D expense is not much different. It is slightly lower in comparison to the last year's spending. The operating income is almost 30 percentage point lower this time around, and the net income is lower by around 10 percentage point, more than 10 percentage point. And I have already listed the factors contributing to the lower net income. But moving forward, as the effect of remdesivir sales fades, I think that the things are likely to stabilize and the company is aggressively working on the new products for effective treatment of various diseases. So that is likely to help the Gilead Science gain firm footing in the market and enhance its revenues by reaching out to the more and more patients and doctors across the world to offer them the solutions to the various diseases. Here we have these breakup of the revenues for from different segments. The HIV remains the largest segment for the company's revenue, with its total contribution being more than 60 percentage point, and the 10 percentage revenue comes from the Veklury. For the oncology, the growth has been quite strong, and that is all for the segment-wise results. Now we move on to the cash flow statement to see how the company generated cash and where it spent that money. Alright, here it comes. The cash provided by the operating activities were upward of $2.1 billion, which is lower in comparison to the cash generated by operations a year back. Then, if we look at the cash used in the investing activity, it is markedly higher. But then the cash used in financing activity is lower. So we have on net the increase of cash and cash equivalents by 380 million to now the cash and cash equivalents at the end of period of US dollar 6.08 billion. So for the company, the cash position is comfortable. It is sitting on a cushion of US dollar 6 billion, which is quite good for the company of this size, and it can spend it for the acquisition or for returning value to the shareholders as it pleases. I think it will be more focused on the R&D to enhance its product pipeline and in effect be able to grow its business in the coming quarters, coming years. Now we see how things have been for the Gilead Science share price. All right, here we have it. The euros chart, and there has been a lot of volatility in the currency segment because of the Federal Reserve's monetary policy announcement yesterday and then the ECB's announcement. Now we are going to be concerned only with the Gilead Science share price, which is not really going anywhere. It has been consolidating in a sideways manner. So after making the recent peak of 76, it has been consolidating in this range of around 4 to 5%, or 3 to 4%, and it is a bit difficult to trade and invest at the current juncture because we don't really have a clear cut growth trajectory for the company. So that makes it pretty difficult to expect the Gilead Science stock to grow. And the only thing we can do in this kind of environment is to define the range, buy at the bottom of the range, and sell at the top of the range. So that is something which we can definitely do. For the hourly charting formation, the near-term support remains at this prior swing low. So if the stock dips closer to this range and then consolidates and doesn't really decline much below this range, in a course of time, as and when it starts to make higher highs and higher lows formation in lower time frame series, we can start looking for buying opportunities. We can adopt a buy on dip stance, but right now I don't really feel there is much to look at the stock for growth in the next few sessions. If we expand the time horizon, the picture is not really much different. It has been spending its time closer to this range for last couple of weeks, and it had declined quite sharply after making this peak at $87. From that, it is almost 20 percentage point lower, so it is not really far off from the bearish territory. And in this kind of environment, I feel that we can keep looking for the opportunity to even short it, provided it doesn't really rise past this immediate swing high, which is there around 77, 78. So that is the crucial price range to watch out for, and we can adopt a sell on rally approach for the Gilead Science in coming weeks. So looking at the current juncture, I feel instead of expecting growth on the upside, we can expect some decline, and the decline might extend towards 65 or thereabout, so we can position ourselves for a further 10% fall in the Gilead Life Science Inc.'s share price. From the longer term perspective, the things are not that bad. It is still going sideways with the slight tilt on the bearish side, and that is one reason why I felt that it still has the potential to decline further, and we will still be some distance away from these prior swing low. And from the long term, the price formation remains of higher highs and higher lows. So even if it dips below towards 65 or thereabout and holds the ground, doesn't really decline much, maybe after those decline and consolidation, we can even think about investing in it from the long term. But for the next few weeks, the things are going to remain on the bearish side. That is my expectation. And instead of looking for the buying opportunity straight away, it will be better for us to allow it to spend these next few months in the consolidation phase, and in course of time, I feel we are likely to find better opportunity to go long in the second half of this year in the Gilead Science stock. So that's my outlook. Looking at the current price formation for the Gilead Science, we have already looked at its quarterly earnings report, which is not showing any signs of turnaround in the downward trend for the revenues. And I feel unless something changes on the fundamental side, we can't really expect a big growth on the technical side. So we will have to pay attention to both these factors while making the informed decisions regarding the trade and investment in the Gilead Science Inc. stock. So that's all from my side for today's session of the daily stock. If you have found the session informative and useful for your trading and investing decision, do like and subscribe to the channel, and you will be able to access equally interesting sessions by me as well as other hosts on different topics related to the market. That's all for the day. I'll be back tomorrow with interesting company to look at in the next session. Do come back. Thank you all for joining. Good